Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news the sudden Middle East explosion is likely to put safe haven assets back in the spotlight this week. But first, China said its giant foreign exchange reserves were little changed in August. They don't provide transparency of which currencies they hold them in, but we do get some of that from the US data, which shows that Chinese holdings of US debt is about $800 billion, or a quarter of the total Chinese holdings, and falling. That means the Chinese hold $2.4 trillion of other country debt. Many will be rogue nations. The Chinese foreign exchange reserves now have high risk attached to them and will become an increasing problem for them, not to mention the debtors. And Hong Kong and southern China are bracing for another typhoon. Their stock market will be among many institutions not opening this morning, perhaps all day. In India, their central bank kept its key policy rate unchanged at 6.5% as expected on Friday, but said it would keep liquidity tight using bond sales to bring inflation closer to its 4% target. In Japan, household spending unexpectedly rose more than anticipated in August from July, up 3.9%. That might still be lower than a year ago, but the month-on-month rise impressed financial markets. In the US, there's been a positive surprise from their labour market in September. We had expected the 170,000 gain might have an upside, but no one expected the gains to be as strong as 336,000 delivered, nor the big upwards revision for August, up from 187,000 to 227,000. US vehicle sales rose at an annualised rate of 15.7 million in September, according to updated data. And there seems to be significant progress in union negotiations with the car makers. The car makers seem to be caving quickly now. And it wasn't only the US's labour market that turned in much better than expected results. The Canadians did too. The US Treasury 10-year yield starts today up 2 basis points from yesterday at 4.80% on the implications of the US strong labour market. The new conflict between Israel and Gaza may well add to risk this week, however. And the price of gold will start today at just on $1,833 an ounce and up $4 from Saturday. Although that is down $17 from a week ago, it would not be surprising to see this price rise sharply from the Gaza conflict explosion. And oil prices have stabilised lower at just under $82 a barrel in the US, while the international Brent price is just on $84 a barrel. These are 5-week lows and are $8 lower in a week. But the new Middle Eastern conflict may well change these levels when trading resumes. And the Kiwi dollar starts today at 59.9 US cents, and a very minor slip from Saturday. Against the Aussie, we're marginally firmer at 93.9 Australian cents, although that's up 0.5 cent in a week. Against the euro, we're unchanged at 56.6 euro cents. That all means our trade weight index starts today at just on 70, which is actually little change in a week. Get more news about the New Zealand economy from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.